Welcome back. Today we are talking about filing status. We're talking about if you're married, if you should file jointly or separately, or something else. The first question we always get is, do I have to file as married? And yes, if you were married on December 31st, you're considered married for the whole year. So even if you weren't married until December 31st, you're still considered married for the full calendar year. Some exceptions to having to file as married: if you didn't live together the last 6 months of the year, particularly if there is a child in the picture, it's possible you could file head of household instead, but we're going to focus in on a married couple that lived together. So should I file jointly or separately? As with every tax question ever, the answer is it depends. The first thing to know is that in community property states like Washington State, community property rules apply. The state law applies. And basically what that means in a nutshell is that in order to file separately, all of the income for both of you has to be added up and then split in half to report half on each tax return. If there's a separate property agreement in place or you lived apart all year, it's possible to file under separate property rules where you just report your own income. But in general, again, we're in Washington State, we're going to talk about community property rules, add it up, split it in half, which really means that in general, it's not going to benefit you to file separately in a community property state. We always start with a joint tax return and then split it to compare and see which one is actually better. So there are some significant downsides to filing separately. One is that if one of you itemizes, both of you have to, or if one of you takes a standard deduction, both of you have to. So that's certainly a consideration. You can't take a number of deductions if you're filing separately. You can't take the student loan interest deduction, earned income credit, education credits, the adoption credit, the child care credit, the premium tax credit. All of these credits are disallowed when you're filing separately. The IRA contribution rules are such that pretty much if you have earned income, if you both have earned income, you can't make IRA contributions. Also, if you're retired, your Social Security benefits may be more taxable under a married filing separate return than under a joint return. There are some times to consider filing jointly despite all of these downsides. If you don't have any of those credits anyway, or if your medical expenses are really high and you would benefit from both itemizing and itemizing with that lower income, that might be a good reason. If your spouse isn't willing to file with you, or they're not forthcoming about their income and expenses, or you're concerned about liability, those are some good reasons to not file jointly. Or if you're in a state other than Washington State, a state that has an income tax, it may be beneficial because of state law, not so much because of federal. If your spouse owes back taxes and that's why you want to file separately, just know that yes, the IRS can very much take your joint refund to pay those back taxes, but that there is a form, an injured spouse form, that you can submit to the IRS with your tax return to say, hey, I am an injured spouse here. I was not liable for that debt. Here's my half of the information and I would like my half of the refund. The IRS evaluates those and then it's in their court to determine how much of a refund to issue to you. So in general, filing jointly is going to be more advantageous in a community property state, but it's always worth doing the math and having the conversation. Did you have any questions? Are there any points that I missed, questions that I missed? Is there anything that you think that we should chat about next time? Definitely let me know, and have a wonderful week. See you again next week.